Welcome back, everyone. Welcome back to Trash Trades. We're back with another motherfucking episode.
Finally,
VJ's back with a good ass a trade. We got some
some of the
education.
worst.
We got some shit. We took a little break. We kind of addressed that in the last episode. We're back punching it.
And then we took another break. Apparently, I found out. I just found out too.
Yeah. But you guys don't know that because it's all behind the scenes. We do a lot of things behind the scenes. We get those videos clipped up, social medias, those reels, everything. We do a lot of work to bring you guys a good product. So we're definitely gonna have some lessons in this episode. A good back testing sort of insight of what to do with your trades, and more of a looking back and reflecting on certain trades, as all traders should. Whether you're super profitable or you're just starting, you should definitely look back on your trades, what you did wrong, what you did right, etc. And that's a little bit of what we're going to be doing this episode. So you guys stay tuned. It's gonna be good, man. It's gonna be fun.
Or don't do it and lose more.
Yeah.
I mean, we're getting used to fucking losing.
Lose more. You know what? You can lose. If you're not going
to
stay to the very end of this episode, you're going to continue to lose. It's a curse. So, and if you don't want to be cursed for your trading, you got to hit that subscribe button. You got to like the video. You got to comment, or else you'll be cursed in your trading. So, anyway, we're going to get into this episode and roll the intro.
Order filled.
Go for it, Beach.
All right. Yo, I forgot, I almost talked then, but then I was like, something's telling me to not. I'm so, rusty with this shit. It didn't, even occur to me. I was like, oh, yeah, something happens here, but we roll the intro, but then I was going to immediately start talking like a fucking idiot, so.
Exactly. Mid-sentence, BJ's going to be talking, I'm going to roll the intro, and he's going to go like he doesn't know what to say, I'm just going to fucking roll the intro on him.
Absolutely. All right, let me take a sip of this coffee before we get into it. I'm a scientist now, guys. Well, the last show that we have, I probably still had the purple background, probably, no?
Ooh, that is a good question. I don't know.
I think so, because I've been trading with this little scientific doctor background, which honestly, guys, it's sort of nice. And I hope that you guys like it. It's not as playful as before. It's not as much, Cameron styling as I do, but it's fine. It's fine, we're gonna see the stuff now, guys. All right.
Yeah.
This is stuff. And we're gonna see it now. Okay. So
you see it.
I sort of erased my drawing so it looks crazy, so we can see the candles. I'm gonna talk about this trade. This is a trade that I took actually on Friday. I've had plenty of trash trades. I used to think that there's gonna be a day where I don't have trash trades.
Never.
Well, I mean, there will be a day where we don't have trash trades. But we're never gonna be able to dodge losers.
Yeah.
But this trade here, it's very reasonable, actually. I was trying to be somewhat chill about it, but I did a couple of mistakes that I'll show you guys. So, here's the chart here. As you can see, I mean, we'll go to the week and it sort of gives it up, but we're on the monthly. We're sort of drawing into this fair value gap. Right here, this monthly fair value gap. This fair value gap here sort of bounces up and we broke structure, right, to the upside. Little monthly fair value gap here. Monthly order block here. You can see this all right, Luca?
Yeah.
Okay.
Pretty clear.
And so it seems like we're looking for bullish prices, right? Maybe this is a IRL order block. And then we're maybe going to head for the ERL, external range liquidity, which should be this high, probably in the 50% of this leg. Maybe even this one, but that's a good target in this fair value gap. Maybe even to fill this fair value gap is sort of what I was thinking, right?
Yeah.
And you can take a fib from here to here, and it'll show maybe we're definitely a discount, probably OTE of that leg. We can do it real quick. Oh shit, completely wrong one. Oh yeah, perfect OTE.
Yeah.
See that?
There you go.
And you can probably even go here and it'll be in discount. Yeah. So makes sense for it to bounce. Also, if you look at the crew chart, you probably haven't seen this looking sort of crazy.
Wow.
Coming from all-time lows. Isn't that weird? Swept. This is in like the 08 recession. Work structure down, swept, COVID, moving back up. Very weird. Somehow gas prices are higher than ever. Hey man, I don't know anything more than this trash trade. Okay, so.
But the bias was up. You were
thinking
longs. Bias was up.
Yeah, bias was up. I was thinking longs.
Yeah.
On the weekly here, just to make it a little cleaner, I'll erase it. From this leg to this leg, which is, this was on the monthly, that little break of structure we had right here.
Mm-hmm.
Once again, OTE. And there's a fair value gap here, holding up the price.
I like
and
that.
As you can see, break and structure again. Heading for maybe this high was the first target. But, now I'll show the drawings. It's a little bit clearer. This monthly fair value gap fill was the top of that monthly fair value gap I was talking about before. And then there's a little weekly fair value gap here.
Okay.
And if you take fibs from here to here, oh, dude, I'm new to this, guys. I just fucking started. It's crazy. What am I doing? From here to here, it's that this is almost in discount. And then you sort of see this swing high here. And, sometimes the algo's a little tricky. And then you can be, all right, this is all seems like, it's drawn to at least equilibrium.
Yeah.
This price either moves to liquidity to fill imbalances and from discount to premium. So draw to equilibrium often, at least, and sometimes to Luca's favorite OTE type of situation. So everything to me looked like, we're going for these highs and to fill that fair value gap, right? And I was playing that throughout the week. And it was working. God, I'm so good. It was working pretty successfully.
Yeah.
Drawn to here. We might have. I think we barely missed it. Yeah, that's why it's still that high is still looking to be targeted. Sorry about the mess on the standard deviations. Will look a little clearer here in a little bit. But these were my draws, and we've been sort of stair-stepping, inverse this daily fair value gap, made this daily fair value gap through it, little daily BPR. After this break of structure here, right?
Yeah.
Held up by this weekly fair value gap. So everything's like, all right, we go bullish. So let's get down here. I'm looking for these targets. And it should be known, it was Friday, right? And as you can see, since, Monday starts right here. This is previous week high. We tag it, make some new highs, come down into roughly OTE of this range in this hourly fair value gap, and then was playing longs to these highs.
Yes.
For the rest of the day, right? For the rest of the week, it was working out great. Here's some standard deviations to just look for targets, and as you can see, the critical areas are 2, 2.5, and 4 for your targets. As you can see, they're lining up with these liquidity areas for the whole week, and then the 4, these things are sort of lining up with these targets. Even this major one, a major sweep, it's still lining up with this untouched. So I'm like, oh wow, we good to go. Just good to go. And we started retracing through the night. So I'm like, okay, let's boogie here. I started driving some fair value gaps. I'll show you guys on the floor real quick. There's a fair value gap here. There's a breaker here. Up close candle. This starts this sweep of these lows into here. This is a strong bounce area. As you can see, we bounced once from it. But as you know about breakers and PD arrays, many times, especially if we sort of expand a little bit, this will be a further discount. Come back, maybe sweep this low, then go up.
Yeah.
So I'm just monitoring these areas for a long wait for my model, trying to be patient and just not be a shithead. And then I sort of be a shithead a little bit. So
always happens.
It always happens. But there's reasoning on why. Okay, so we'll just catch up here. I'll just move it to an hour so we get a little bit closer. So through the night, we started doing some of this. So after we took previous week high, and then we made previous day high, little failure swing to this. Oh man, perfect LRL, right?
Yeah.
Low resistance liquidity. Love to see that as a future target. However, we don't know where the future is. That's why everything is a probability game of trading.
Mm-hmm.
But after we took previous week high, we started definitely breaking structure on the, on lower time frames, and you could have played, this IRL or ERL, external range liquidity, to internal range at some point if you're into that. But I wasn't going to play. I was just waiting to play for the overall trend and it be longing. And then, what time is this? 2 o'clock. Let's catch up to. Oh, perfect. 5,
Interesting.
6, 7.
Okay.
All right. So that's not too bad, right? This is like I started like look at this stuff. I actually had this charted out the day before, waiting for this, and I even posted a TA thinking like this was like likely when we get this retrace in to go up. I don't know if we needed like OTE of this leg or OTE of this one. You never really know. I'm sort of monitoring all this, but this is starting to look good. No.
Yeah. Okay.
8:30 opening prices to be there. Midnight opening prices here, so we're lower than that. Expansion seems particularly likely, in my opinion. However, even though in the shorter time frame, the most recent time frame, we are breaking structure to the downside, but that happens on higher time frame, whatever. So I'm expecting that. So let's get down to the 5. So I make a couple little. This is where I start getting a little crazy. So I'm expecting something to happen. I want to play longs at some point. Even here, sort of like fakes out.
Mm-hmm.
Doesn't really do it. And then now I'm looking at this. I'm like, oh, we get like sort of the full fill of this 4-hour breaker.
Yeah.
It's 8:35. And okay, now I'm sort of seeing something interesting. Now, off of the 4-hour PD array, you should frame a 15-minute market maker model. My first mistake was to be like, the 5's good enough for me today, boys.
Yeah.
Because it just looks like it's setting up perfectly. This candle closes. This is a change of state of delivery. That's an order block now. We're in this OTE. 8:30 opening price just occurred. We got under it for a second and we popped. I'm looking for an entry. I'm being calm and I'm being patient. Let's go. Looks good.
Mm-hmm.
Closing above this even a little bit. This was an inversion daily fair value gap, or inversion volume imbalance on the daily. Here's a volume imbalance in the daily. So I'm like, oh, okay, little reaction maybe to here. No biggie. No biggie. Not a huge reaction. I bet you on the higher time frame, this is the 15-minute change of state of delivery or some shit. So I'm like, okay, this is okay. And I'm looking to like discount this leg. I'd like to enter here or into here. And then we'll just take it to the highs. Why not here? Fuck it. We're doing it up, man. You know what I'm saying? But even like, I like to take a trim here, maybe 6. I could trim it MOP. It's like 4R, like PDH. I mean, this is what we've been going for. The standard deviations are hot. Standard deviations, what is that? Oh, come on. Perfect, dude.
Yeah, to be honest, I don't really spot anything wrong so far.
No,
a little ambitious,
there's not.
But
a little ambitious. I mean, I've been accused of less. Been accused of more. And then we get in there hot. I'm in.
Okay.
What's up, baby?
So that's your
What's
entry.
up, baby?
You took your entry at OTE.
Yeah, no problem.
Okay.
We're doing this, man. All right, let's get to it. Okay, we got it. Huh? No problem. Resweep. Hold up. Good guard.
Okay.
And then you're like, well, I guess I was supposed to do the 15-minute. Let's see what that looks like. And then you realize, this is sort of sweep looking. On the inversion daily fair value or volume imbalance in OTE of this leg. Hold up. That's a fair value gap. That's an order block. Sort of tested maybe this thing that's about to read. Did I just fuck up here?
Yeah.
And yeah, because if I waited for the 5, that is not a strong enough break of structure. That's tricky. It's stopping there. I would want to see another candle, and then we can think entries.
Okay.
But I aligned a little bit short of the time frame,
Okay.
and it just kept going down. Also, it is Friday, and we sort of hit the objective already in the form of previous week high or these highs from earlier, the intra-week high. And on Fridays and stuff, you know how like if you sort of hitting the objective, it doesn't need to continue always. It can
Yeah.
sort of reset for next week. I do think that there are still likely longs for next week, but it might need to,
You
come
know,
down here. Might need to do some other stuff, and maybe I'm wrong. So the trade itself is not that terrible, but the reasoning to get in there and to skip like on the 5, like that looks much more solid. It does not look sweepy. But on the 15, where I'm supposed to be, it looks better. And then even here, this is actually a better long at least, right? But I wouldn't even say that it's like even really trustworthy. You know what I'm saying?
yeah. See,
But it doesn't lose as fast as this one. You know what I'm saying? It's still a little bit better.
it is interesting. I do think that, like, looking overall, I don't think that you did a lot wrong. Like, I'll list out some of the things I really like. Like
Okay.
when trading, like VJ, especially in this example, he was very aware of all of the different time frames, right? So he went through every single time frame. He did multi time frame analysis. The only thing where I feel like it was a little it's just not clear enough was he went to the smaller time frames for
Yep.
a much larger move that he was anticipating on the daily, the
Yeah.
12 hour, etc. So one thing is, I think, to be honest, VJ's analysis might be right. We might see a change in price in the future. I do think that it is something very what's the word for it? It's just not a high probability for you to go on a 12-hour analysis and then try catch the very bottom of
Yeah. Yeah.
a 5 minute leg.
Yeah.
Like
Yeah.
it's
You
also
reminded me.
on different time frames, because like a lot of traders, they would be trading, and this is an example on oil. It goes for
Mm-hmm.
any time frame, like NQ, ES, or whatever. If you're trading any
Mm-hmm.
other a stock or a future, as soon as you go into the higher time frames straight down to the smaller time frames, it's very important for you to let the smaller time frames evolve and play out, so you
Yep.
have that reassurance that, okay, look, your analysis is already playing out. Now I can enter. It's always really sketchy when you start just trying to call the bottom, trying to call the top, go into those micro time frames. And in this situation, I feel like VJ had a very great bias. He had a good multi-time frame analysis. He caught a quote-unquote good entry. It's just it was too small a time frame, and he really didn't let that higher time frame analysis play out.
Yeah, so you hit it absolutely spot on the nail, and it reminded me actually of the other point that I wanted to make, which was related to that.
Yeah.
So like my model is a market maker models. Trade them like MMXM Trader like sort of taught us in that course. I was already trading before, so I still utilize I use a lot of like weekly profile, daily profile stuff to sort of anticipate what's going. That's why this London retracement protraction, setting up this low resistance liquidity, right, for the draws. Like
Yeah.
that's why I was anticipating long. It's very likely I mistimed it. Like it just set up more, and I wasn't thinking as much of the weekly profile as this because I'm actually pretty new to CL. As you can see, this is
Mm-hmm.
a crude trade. It's not like NQ, so it's weird. Like I should trade it just like I trade NQ in a way,
Yeah.
but I just started putting like midnight opening price in 8:30. I always have my NQ and ES. I was like, yo, I mean, this might need to be like 7 or 7:30 as it's commodity, but like still, it's like you know, like just realizing like, yo, it's Friday and we did sort of hit like major objectives. in the market maker model, what I was attempting here, let's put this back here. What I was attempting here is known as the low risk entry, which is actually one of my primary entries, and be willing to sit through the bullshit because it is pretty low risk, but it is more likely to fail. And just like Luca was saying, like we could probably, let's just say like this is a market maker model of some type right here, right? OG consolidation, come in here, 4-hour fair value gap, and then we start breaking structure to the upside, right? So in a way, this could be the low risk entry on this order block that was made on this suite. This, you could really think of this one as a low risk entry as well, because it's like the first like break a structure, and like fair value gap, OTE sort of entry here, and then so this might be the low risk entry, but like these sort of confirm that a market maker model is actually going on, and also this is on a 4-hour fair value gap, so this is on the 15. So the correct time frame alignment, like allowing enough time to validate this time PD array, because the time is important. So then pretty much every other retracement entry, right? Like, okay, let's just say this is the low risk entry. This is where I try to get in and like place my stop here. But like this one's actually more valid because here is another OTE. Now that the low risk entry has been established, this is like first stage accumulation. And here's an order block, another sort of sweep of these lows to reestablish and to push up. And then here's like, low risk, put the stop at this order block, maybe stop at this low. And then notice all the down close candles are just support price until we hit the objective. Yeah. Pretty clean. Here's another entry on an order block. Here's another entry on this order block after break structure here. Another entry, and then just sort of just crawls its way there to this high, does an OTE retrace on this, and then blasts off. And like this takes several days, but like you can notice you don't have to enter here. You can enter here or even here, and even this pullback only puts you barely red for just a little bit. This entry, you're never red. The low risk entry where I'm trying to get in, but sometimes it's just too early because maybe I trick myself into this and then it just resweeps and then goes. That's why this is probably just too early. Like as you can see, the price later went to here. Like it could just go to here, or it could start more bearish, sweep these guys, and then reattempt to go, because this is how the market does its thing. Like half of the reason for these market maker models, in my opinion, is to set this up, to set people into shorts that are paying and then take the liquidity on the way back up. And that's why, like, the three drives pattern is sort of like the opposite of that, where I was sort of looking at this as like the three drives pattern is going to pop us, but like three drives pattern is like, you'll be looking at a high and be like, why didn't it sweep that high? Yeah. But sometimes like they could just make the three drives pattern. I don't know if you guys know what it is. I'll try to draw it. I'm not an artist with this shit. But here we go. It'll be like when the price does this type of thing. Hold on. Why am I even drawing it here? There you go. When let's say you could be in a higher time frame PD array, but sometimes this can happen out of nowhere. And like there could be like a fair value gap here. Or like sometimes what happens is like there's a high up here and we're expecting it to sweep. Maybe ES sweeps it, we're playing NQ. Maybe it doesn't, but like let's say it just doesn't have enough to get there. This generates enough liquidity for them to dump. Yeah. And not need to get there. So if you see this type of thing, or in this particular case, like low resistance liquidity being set up, like this essentially ensures that they make money on this way back up to the move, and when they hit these areas as well. Yeah. And it stops there, but this is just more money. So this is half of the reason why these things are there, because shorts were valid as shit the whole day. But at some point, if the draw is to the high, they will not be. And these are in some way like higher time frame scalps, you know what I'm saying? Like hold before you fucking before it switches. So
Yeah,
yeah, that's all I got.
I think, there's always an argument for like super multi-time frame analysis, high risk to reward trading, and technically there's nothing wrong with that. You can definitely have a model with a 15 risk to reward and be profitable. It's I don't think it's much of the risk to reward type of aspect. A lot of people like to really try their best to call the tops and bottoms with soupish plays, stuff like that, and really like find the sweep for the overall move. And I just feel like the only problem with this trade was it should have been more correlation with price targets and an entry that was a little better regarding the price targets. For example,
Yeah.
it sounds a little much, but entering on a 5 minute retracement for daily highs or weekly highs or something like that, it's very likely to fail. Sure, you have a high
Yeah.
risk to reward, and you really need that more
Yeah, I
of
should have
a
allowed it. Like, yeah.
yeah, you need
I 1000.
more of a reassurance that your trade is already playing out, so then you
Yeah.
can get something that is not 15 risk reward, 10 risk reward, but it's a lot higher
Right.
probability.
Yeah, this is sort of why I brought this example up, right? It's like I'm over here trying to uh, get this, like the maximal risk to reward, when in reality, the safer play is always in the first or second stage after it's already established. Like,
Yeah.
And so that just requires time. So I'll be looking at something like this and be like, yeah, let's get this thing, 6. But then if you take this same thing and then you just get it from here, it's like, okay, well, let's say your stop is like around here, and then same thing. Oh, 4.62. Oh man, you're a fucking absolute failure, piece of shit, idiot. It's like,
just
no, that's actually fine. You stop maybe as large, or like, hold on, yeah, the stop says 0.31, and over here it's 34 cents to 31 cents. But like, this is more likely to play.
Yeah.
And maybe because this wick looks a little sus, okay, wait for it to break through the wick. Okay, let's see what the RR on this one is. Delete this. Sorry, go on, Luca. I'll just.
It's more of a preference for who you are as a trader. A lot of our viewers, a lot of the people that are watching this episode, they either trade ICT concepts like us, or they trade patterns, trend lines, stuff like that. And to be honest, there's the majority of traders that will speak to a lot of our viewers right now. They really like to intraday trade, so on smaller time frames, scalp a couple minutes, etc., with whatever their strategy is. That's not the problem. Here's the thing where I just want to make it clear. In trading, you have to be adaptable to your strategy. If your strategy is trying your best to, call those tops, call those bottoms to the cent or whatever, and it's working for you, sure, that's fine. If it doesn't work for you and you're seeing no change in how many trades actually play out, you're not seeing it become more profitable, you're not seeing any progress, it's more of an indication to move on. For you not to be ignorant, for you not to be stubborn, admit your losses, and maybe I have to change my strategy, etc. Because unfortunately, this is the main problem about calling tops and bottoms and having super high risk to rewards and looking for that home run type of trade, is that a lot of the traders are not mentally strong enough to sit through all those losses before you hit one green. You need to be a very, very strong trader mentally for that risk to reward to actually play out without your strategy changing, or without you taking double entries or messing with your strategy or moving your stop, etc. So it's really about it. I don't think that in this case, VJ's trade was like necessarily super wrong. I just think it's more of a reflection of how VJ is as a trader. VJ can catch some 3-4 risk rewards and with pretty high probabilities. I've seen him. And VJ, please make sure to back me up on this if I'm saying anything wrong. But that's more of the trader he is, and not hitting those 15 risk rewards. And it's more of like sticking with your strategy and sticking to what works. Changing something very suddenly, no backtesting, etc. It is very prone to emotional mistakes or actual technical analysis mistakes. So
yeah, that's very poignant point. Oh, my bad. I don't know if you're finished right
No,
now.
no, you're good. I was just saying. So I was just gonna recap there for a second. So any of the traders that is watching this, you have to be more, like you have to remember your historic, type of trades, and like what's your trading style, so you don't start calling tops and bottoms. You don't immediately switch to the home runs, and you stick to something that's more familiar with your strategy.
Yeah, I that's such a that is such a honestly good read, and it is a bit of a weakness in my technique. And honestly, it's a little bit emotional, I would even say, if I'm being fully honest, because um, there's always that little bit of fear I'm going to be left on a move.
Yeah.
That I've done all this work and thought process. So sometimes this I've noticed with the best traders, they don't do the low risk entry.
Mm-hmm.
Because this is extra confirmation that makes it so much stronger.
Yes.
Sure, you get however many more points, but in reality, you should only be trading for confidence and conviction in your model. And while the low risk entry often does work for me, and it does tend to be where I enter, I have to really allow it to do these two break of structures here and whatever for it to be strong for me, and on the right time frame for it to allow my error rate to be lower. Here, as a result, I did not do that. This should have been also looking at it on the 15. I looked at it on the 5 because I was so worried about missing my entry rather than having the patience for even this low risk entry, which is a legitimate entry, to actually manifest. So I jumped the gun on even the basic principle for the normal low risk entry, which never shows.
Yep.
Right. And then these confirmation entries I tend to sort of avoid, because not avoid, but I'm looking to enter here rather than this. And this trade, one of the reasons why I showed is because sort of to illustrate that this is actually the higher confidence, more confluence trade.
Mm-hmm.
But sometimes it might mean this pops up to here and then takes a sec and then even gets closer to the target and then comes down, and you just have to it will often do that and make you feel like you miss a move, or maybe sometimes you do miss a move, and that's fine. But me sometimes getting in here, this one's good, but this one is out of essentially fear of missing out on the move.
Yeah.
So I adjusted it and be like, yeah, 5 minutes good enough. I remember making that decision, and I thought that it was a good decision, and now I realize why we do this. Because
Absolutely.
you need to allow it the time. Because you might have been thinking longs from here, and then by the time it gives you, what is this, Wednesday at 4? Yeah, 6 hours later is where you enter if you're doing it right. Or even in the low risk entry, that's 5 hours later. That's quite a bit of patience to allow the price to do that. But guess what? It'll give you time. It's really just checking to see if you're willing to wait. Because okay, you might have been thinking shorts here. Okay, it gave you plenty of time. Even when you're down here, it still gave you time to get into shorts. Allow it to fucking do what it needs to do. You know what I'm saying? People, we'll get obsessed. Oh man, we missed the beginning of the move. The move must be done, bro. London started and this thing doubled twice. what it dumped right here. So if you're really thinking shorts, like that's sort of how it does. Like it'll actually accelerate towards the price and maybe go further than you realize.
Yeah.
So like it's okay, just give it a second. Like even as it dumped, it still kept coming back. Still kept coming back. You know, and then dumped even more, even faster. So same sort of type of thing here. So I don't know.
Yeah.
It's like patience is all you need. Like when you backtest and you do stuff like this, it's so valuable to your trading. Just because you realize, like, yeah, the market always comes up before it goes down. It always goes down before it comes up. And those few times where you're scarred for life because, like, you wanted along here, and then all of a sudden it's here, and you feel like your life is fucking over. That's you freaking out.
Yeah. Yeah.
And we all do it, but like, fuck, man, relax.
It's difficult. You know, if you're putting in that effort, that back testing, the reviewing of your trades, even watching the show. If you're here into the end, we kind of say this multiple episodes. It's a good sign. You know, you want to improve. You want to increase the probability of you becoming profitable. So if you're staying to the end of the video, not only do we appreciate you very much for staying to the end, but you're also showing those attributes to actually becoming profitable. And yeah, I think it was a great episode. We reviewed a lot of lessons, a bit more of an insight of how VJ trades, the three drives pattern, etc. So I think it was a very productive episode. And yeah, what else do we have to say, VJ?
We love you.
We do.
All right. Wait. Oh shit! I do the outro. Oh my god.
Yeah, I didn't want to rob it from you.
I'm sorry. We haven't done this in a while, man. Holy shit. All right, guys. Well, thank you so much for listening. You know, we had a couple of weird things happen, like a knock on the door and some other shit. But you know, we should be back on our normal recording shit and just fucking putting up some banger ass fucking loser bangers. You know, I'm with it.
Can't wait, man. It's gonna be great. Good reviewing, good educationally, everything. We're gonna help you guys. If you guys are on the journey with us to becoming profitable, we're gonna help you guys out. You guys are gonna help us out. It's gonna be a win-win. You know, who wouldn't want
Absolutely. I do think we should have less real trash trades though for doing this right.
Yeah, you're right.
Me and Luke are in a special place in our development, and ideally, we're just gonna have losers, and they're not that trash. We're like, yeah, I see what you're doing. I like what you did there. You know what I'm saying?
Ideally, we'll see.
All right, we'll see. All right, you guys. Love y'all. Take care.
Absolutely. Subscribe.
Subscribe, and
comment.
Is there a place where they can send us money?
Oh,
we'll get that
yeah. Invest in us. We're having an investing platform.
Yeah, if you want to,
bots.
If you want to give money,
give us some shit. Thank you.
Yeah, we're not. Listen, we're not above anything, you know.
DM us on.
I mean, we're above a lot of stuff, but
not this shit.
We'll beg.
Yeah.
All right, we out of here.
We'll see you guys later.